Ladies and gentlemen, the stock market is moving lower today. Broadly speaking, all of your indexes are down quite a bit. In fact, like the Russell and the NASDAQ, not having a great day. Now the VIX is spiking, 10-year treasury yields are falling today. Here in this video, I will explain and go over all of your major news and what is causing markets to fall today. And if this is a concern that you should have going ahead. Now, part of today does have to do with Walmart earnings, as I shared with you guys previously. Walmart is really the most important earnings of this earnings season from an economic standpoint. If there's going to be an issue with the economy and with the consumer, Walmart's probably going to tell us about it first. Now, here's the headline here. It says Walmart forecast slower sales and profit for fiscal 2026. Analyst says Walmart outlook signals slower U.S. consumer spending. On Thursday, Walmart forecast sales and profit for the current year below Wall Street estimates, citing the need for caution in navigating an uncertain geopolitical landscape. High interest rates and persistent inflation have hampered U.S. consumer spending for 2 years. It goes on to reference tariffs and how that could impact the business. They say, quote, "We're 1 month into the year, so I think it's prudent to have an outlook that is somewhat measured," Chief Financial Officer John David Rainey said on a post-earnings call. Quote, "We don't want to get ahead of ourselves. There is certainly some unpredictability in any environment that we have, but we feel really good about our ability to navigate that. Despite issuing disappointing guidance, Walmart sees U.S. shoppers as resilient and focused on value." He said the retailer did not include an assumption of new U.S. tariffs in its guidance, but said Walmart can manage any new duties well without offering too many details. It says here, quote, "Walmart's lower than expected guidance is a warning that the U.S. consumer spending is slowing," said Brian Mulberry, client portfolio manager at Zacks Investment Management, a Walmart investor. Quote, "At the moment, the labor market is still strong," he said, adding that if Walmart's soft guidance is followed by a decline in jobs, it would be a strong signal that economic growth is slowing. That's the issue, okay? The consumer really can be boiled down to Walmart. And that's what I said in days leading up to Walmart's earnings. That's why it's so important. It's going to tell us a lot about the state of the economy. And this is not exactly like a huge confidence boost when Walmart has troubling things to say about the consumer. Now, they did not say that they are falling out of bed like Walmart did in early 2007. Walmart in early 2007 gave a pretty dire warning about the consumer. We didn't get that today, but it didn't sound great. Now, this is not like an official, data point, so it's not going to move GDP estimates or anything like that, but it does lower confidence about economic, activity for this quarter that we're in and really for the entirety of this year. And I think that is the biggest catalyst today that is actually causing 10-year treasury yields to fall about 3.5 basis points. Now, later on in this video, we will talk about the economic data coming out tomorrow and why that could also be pretty important for the markets. But if you look at your major indexes, Russell 2000 is down about 1%, NASDAQ down 0.62%, S&P is down 0.61%, and the Dow, look at this, the Dow is down 1.27% today. Obviously, Walmart is a big issue there. That's obviously affecting the Dow a lot. But the Dow tends to be really consumer cyclical, right? It tends to be industrials, okay? Companies that would be most likely hurt from a consumer slowing down more than others, okay? Like the NASDAQ, for an example. Like the NASDAQ is probably the most resilient index. They're still down 0.63% today, but that's half of what the Dow is down. Again, because does Microsoft earnings, depend on consumer strength? More, yes, but not nearly as much as some of your Dow companies. So I actually think Walmart's one of the biggest things affecting markets today. The VIX is up 3%, so definitely a little shot of fear heading into markets. Again, 10-year treasury yields are trading lower. Oil is up a third of 1%, which really doesn't make a whole lot of sense. It says here as the main oil headline, oil rises for third day on U.S. fuel stocks draw and worries about Russia disruptions. Because it doesn't at this point look like there's too much progress on the Ukraine war ending. We were optimistic that there was going to be some progress there, but that's kind of gotten walked back in recent days, the last day or two. Bitcoin up 2.3% today, and gold is up over a half of 1%, almost at $3,000 per ounce. Here on the day today, CNN's Fear and Greed Index is down to 44. You are officially back in fear territory. Yesterday, you were neutral at 48. Market momentum is fear, stock price strength, extreme fear, stock price breadth is fear, put and call options, extreme greed. Market volatility is neutral, safe haven demand in extreme fear, and junk bond demand currently in greed. The percent of stocks trading above their 50-day moving average down quite a bit today to 48.5%, down 3.63%, or down 7% today. So if you are, one of the individuals that thinks markets are just too optimistic and, due for a pullback, and you might be right, markets may be due for a pullback, but you're not that strong at all. Like this is pretty normal. Actually, I would say below average in bull markets to have, only 48.5% of stocks trading above their 50-day moving average. And now the AI investor sentiment survey, this thing hit a multi-year bearish high last week. It's down a little bit today, but it's really neutral investors that rose. So bearish investors dropped from 47.3% down to 40.5%. So that's quite a drop, but still really negative when all things are said and done. Neutral investors rose from 24.3% to 30.3%. Big rise for neutral investors, but bullish investors really didn't budge too much, from 28.4% rising to 29.2%. So rising less than 1%. Neutral fell about 7%. Bearish investors fell about 7%, and neutral investors rose almost 7%. So, you're still in a pretty damn bearish kind of emotional position in markets. In the news today, the French president says Donald Trump is creating uncertainty because he wants to get deals done. He also says that he knows Donald Trump, he is someone he respects and who respects him. The Trump administration opens a review into whether to rescind $4 billion in grants awarded to California's high-speed rail project. Fed Goolsbee says if there are big deportations, it does have direct implications for the number of jobs created. Fed Bostic expects inflation to continue bumpy decline to 2% without major rebound. Businesses optimistic on deregulation but concerned about tariffs. Immigration challenges. He sees 2 rate cuts in 2025 but remains uncertain. Labor market is stable but showing signs of easing. Fed monetary policy in a good place but must avoid complacency. Watching impact of Trump's executive order on financial regulation, an economy remains resilient with 2025 expected to be a solid year. And really, Fed officials right now are just nauseously neutral. They really don't want to take a stance right now, too bullish, too bearish, too dovish, too, hawkish. They're really just walking down the middle right now to see what happens. And some of these Fed officials sound like aggressive, like aggressively neutral is maybe a good way to put it. Really saying like, hey, we could be cutting rates. We may not cut rates at all. Inflation could come back again, or this could be just a bump in the road. There's really a lot of, you could also say mixed signals coming out of the Fed right now, and markets just really have no idea what to go off of. And I think this does create an environment where data is going to be really important when it comes out. IRS executive tells staff on call that about 6,000 workers to be fired on Thursday. Fed Musaliam says inflation expectations have moved higher, would make Fed's job more difficult if sustained. And what he's referencing is the Michigan Consumer Sentiment Survey, in which 2 weeks ago came in high for 1-year inflation expectations. That's what he's referencing. But it was Democrats, okay? Democrats expect 5.5% inflation. Independents expect 3.2% inflation over the next year, and Republicans expect almost no inflation, 0.1% over the next year. So the numbers are very skewed, and that's why you've seen a jump in inflation expectations. A lot of that has to do with the tariff headlines and mainstream media pushing the narrative that prices will be going higher if tariffs are implemented, okay? As tariffs have kind of been on pause with Canada and Mexico especially, you should see inflation expectations come down in the final numbers that we get tomorrow, which could be good news for markets, but we will have to wait and see. Trump is calling for a balanced budget now, saying that they really need to get America's fiscal situation in check. Mexican president says the designation of Mexican cartels as a terrorist group was a U.S. decision and Mexico was not consulted. And Macron, France's president essentially, quote, will tell Trump he can't be weak in face of Putin, which I'm sure was never the plan. Now, we did get some economic data today. Initial jobless claims came in a little bit higher than expected, but not really a cause for concern. Coming in at 219,000. We were expecting 215,000. That is up from 214,000 last week. Philadelphia Fed Manufacturing Index comes in at 18.1. Estimates were 20 versus last month at 44.3. So manufacturing index did weaken quite a bit. Business conditions came down to 27.8, a big fall from last month. CapEx came down to 14, a big fall from last month. Employment came down to 5.3, a big fall from last month. Philly Fed new orders, again, a big fall from last month, coming in at 21.9. But look at that. Philly Fed prices paid came in at 40.50 versus last month at 31.90. This could be part of why markets are moving lower today. It's some of those inflation concerns. Now, the CB leading index came in at negative 0.3% month over month versus estimates of around 0 or, negative 0.1%. So weaker economic data there. Generally weaker economic data out of the Philly Fed, manufacturing index today. But that prices paid component that did move higher is not something that the markets like to see. Now, today and after hours at 6:30 p.m., you will get the inflation rate out of Japan. And then on Friday, tomorrow, really the big data is your global composite PMI, manufacturing PMI, and services PMI, with a big highlight here on services because services have started to weaken a little bit recently, especially last month. You did see services come down quite a bit. And it's just giving me a weird chart here. It doesn't want to actually pull up the exact number, but essentially you went from 57 down to 53 after services have really been rising ever since May of 2024. If services fall again, that's something the Fed will really want to pay attention to. That could put a backstop on some of the more hawkish comments we have gotten from the Fed. It would be something they would really have to take notice of. We also get existing home sales for January, existing home sales month over month, and the final numbers for Michigan consumer sentiment. We're going to get 5-year inflation expectations, consumer expectations, current conditions, and inflation expectations for the 1-year period. And I think the 1-year period ahead is the most important part because, again, that's where you've seen the skyrocketing last month of those inflation expectations, and it was really just political. So we'll see if these come back down. I mean, in November of 2024, you were at 2.6%. December, you were at 2.8%. So even after Trump was, we knew Trump was going to be the president, you really didn't see too much of a move higher in inflation expectations. But it's been in the last 2 months that it's gotten a little bit crazy here, and markets do pay attention. So if you move higher on this tomorrow, that's bad. If you move lower, that could be really good. So this data will be very important for markets because, again, we need a strong economy to put up the earnings growth that we're expecting for markets. At the same time, there is a trade-off there. If the economy weakens, the Fed's going to be cutting rates. Treasury yields are going to be falling. Borrowing costs are going to be more affordable. But on the backside of that, the economy is going to be a little bit weaker. And it is a slippery slope when you start to see economic weakness. And especially from markets perspective, when you start to get a little bit of weakness, markets tend to get overly dramatic about that and start to expect just massive weakness ahead. That's not exactly the case. You can see a little bit of weakness here and there, and it doesn't dive into a full-blown recession. In fact, the economy is pretty recession resilient these days. Recessions are getting less and less common as the years go on. Normally, it takes some kind of event like COVID or the financial crisis or something along those lines to actually push the economy into a recession. Usually, just organic economic activity slowing down does not push us into a recession. We had that in 2018, 2019, and we never had a recession from that. So is it impossible to just walk into a recession? No, but it doesn't seem likely at this point. So I want you guys to remember that. The real thing is, do we see progress on inflation or not? If inflation continues to make progress, now that's going to be great. And we'll get more from the data coming out tomorrow. The subcomponents of that services data is going to have some inflation components, and that is what Wall Street's going to pay a lot of attention to as well. Now, keep in mind, the back half of February is the worst 2-week period for markets throughout the entire year, going back to 1928. So almost 100 years now, it's the worst 2-week period for the S&P. Not a big shocker that we're getting a lot of volatility and getting some downside price action today following new all-time highs that we set yesterday. But I want you to keep in mind, we're still in an uptrend. We're still in a technical breakout as you have gotten above this downtrending trend line. And you broke above this on February 13th. So you're still in this uptrend. And, until we get below this trend line, then I really don't think there's too much of a cause for concern. Again, I'm not a financial advisor. I'm not a financial planner. Let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.